and welcome to Bankroll Trading. Thank you for clicking on this video and joining me here, where today I'm going to try and explain my trading strategy in as much detail as possible to help you guys follow along in my thought processes, and hopefully you guys can pick it up and start doing this yourself, because it really is a good way to make some money in the stock market. And my ultimate goal is to quit my day job and do this full time, and I really believe that capability and that option will be there once you build up enough capital with this strategy. So to dive right in, what I'm going to go through my platform, my broker, the layout that I use and the indicators that I use, why I trade options and how I decide which option to trade on each deal. And then I'm going to go into the three strategies, three things I'm looking for to enter a trade. So the first one being the 2-minute opening range break, which is a really high risk trade, and I don't advise it if you're just starting out. The next are the bull and bear flags or pennants, and then high of day and lower day breaks. And then at the end, I'll give you some trade examples with some live video recordings of some of my trades as well. So to start off, my platform and the indicators I use. So I use interactive brokers, and it's for a couple of reasons. Firstly, I think their fills are amazing. Every time I'm trading, I'm surprised with the fill I get. It's normally in between the bid and the offer, which is amazing. They have a special algorithm which does that, so I can't knock them on the fills at all. They are really spectacular. I love the layout, and in this layout that I have, I find it very easy. One click, buy, sell, and get out, which as a scalper is immensely important. You have to be quick on the entry and also quick on the exit. So this platform really does tick every box that I need. I'm really happy with them. I've been using them for a while, and I'd highly recommend them. I'm not affiliated with them, but I highly recommend anyone looking to get into it to check interactive brokers out. The indicators I use on my charts are the 9 EMA and the VWAP. And the reason I use these, they're two highly respected indicators, and traders use them for a variety of different trading strategies. So the price will naturally gravitate towards these two indicators, as so many traders are using them in their strategies. So they're not a key point in a reason why I would take a trade, but they do help to give me an idea. If the price is above the VWAP and above the 9, more than likely you're going to be looking for longs, and if it's below, more than likely you're going to be looking for shorts or put options. To talk you through it, so up here on the top left, I have the level 2 for the underlying stock or share, so always Tesla for me that I'm trading. So this is level 2. I don't pay too much attention to it, but it's good to have it there to see if there's any really large orders or anything like that. Down here is probably the most important bit, the 2-minute chart, which has the 9 EMA and the VWAP on it. This again is time and sales, level 2, just seeing what's going through. Again, I don't pay too much attention to this. I'm more focused on what's going on the chart. I try to keep things as simple as possible, and I don't want to overload myself. Up here in the top right is the options screen. So this is where I'm selecting which option I'm going to buy for that trade. So whether it's a call option on the left or a put on the right. I think I have 20 strike prices. I have 20 strike prices listed here, which in the middle is going to be the ones directly sort of at the money or just outside the money. So I'm normally in the middle of this when I'm taking my trades, as these are the ones that are just outside the money that I'm looking to trade. So as I said, on the right here are the put options, and on the left are the sells, and then down here is my order screen. So this will show me the price I get when I enter an order and the price I get when I exit the trade, and I'm always using market orders. I'm not trying to limit in, I just use the market orders. I'm scalping, I want to get in, I've seen the opportunity, so I market order in and market order out. So the reason I trade options is really you get more bang for your buck. There is higher risk, so if the trade goes against you, you are going to lose more money, but if it goes in your favor, you have some really good opportunities to grow a smaller account really quick. And that's the point in my trading career that I'm at now. So because you're trading the premiums and one option contract is worth 100 shares. So Tesla, for example, is trading around $750. If I wanted to buy 100 shares at $750, I need $75,000 to trade with. Whereas the premium on the contracts on, it varies throughout the week, but say on a Monday is $30 to trade one contract, which is the equivalent of 100 shares, would cost you $3,000. So there's a big payoff there. But then, if you gain $1 on the premium, you're going to gain $100. If you lose $1, you're going to lose $100. So, but the premiums move a lot quicker than the underlying share price. So you are at risk of losing more money, but again, you're at risk of building a smaller account much faster, and you don't need, $75,000, $100,000 to get started in this. I can start an account with $5,000 and just trade one contract happily, and then build that account over time, and then you go up to 2, 3, 4, 5 contracts, and by the time you're trading 10 contracts, you can start making $1,000 to $2,000 a day. Granted, you might lose $1,000 to $2,000 a day, but if you trade this correctly, you're going to have more wins than losses, so you're going to grow that account really quickly. And essentially, trading options are the same as trading shares or lots in Forex, but instead of going long or buying, you would buy a call option, and instead of going short and selling the shares, you would buy put options. So a put option essentially is the same as going short on a stock or a Forex pair or an indice, and a call option is the same as going long. And then how I decide which option to trade. So you have sort of two key decisions you need to make. You need to make a decision on the expiry, which they offer weekly expiries. So every week is a different expiry, and then you have to decide the strike price, and the strike price is correlated to the underlying price of the stock. So let me get into that a bit more. Firstly, the expiry I'm going to trade is the first expiry I can. So on a Monday, that expiry would be Friday of that week. And you can go out, you can have expiries up to a year out, but I'm trying to scalp these trades. I'm not trying to hold these for a long period of time, so I'm not too concerned with having a long expiry. And the shorter expiry you have, the more volatility you're going to bring. So that means, again, it's higher risk but higher reward. And then the strike price I'm selecting is the first one outside of the money. And to put that into a way that I can explain is, if Tesla is trading at $747, strike prices normally go up in $5 or $2.50 increments. So if we take an example of the strike price is going up in $5 increments, if Tesla is trading at $747, the first strike outside of the money, which means above 747, would be the 750 calls, or if it's a put, it would be the 745 puts. So if you're trading a put, it will be the strike below, and if you're trading calls, it's the strike above. The first trade opportunity I have every day is the 2-minute opening range break, but these are really high risk and I don't trade these very often. But to get into it, this was a trade that I actually took, and at the end of this instruction video, you'll see the trade recap and my live trading screen. So this was on the 7th of July. And this is our first 2-minute opening candle. And as you can see here, it's trading around $700, which is a key psychological number. So normally when I trade these opening range breaks, these 2-minute opening range breaks, I like them to be around those key psychological numbers. So 700, 750, 800, 650, anything in between that, I probably don't trade these. But if we get into it, if I just draw on here and mark up where the high of that opening candle was. It's there. And what I want to point out is I don't just trade it because it's trading at 700 and it's had a push up. But if you look here, and if we look down here, it has a sell-off to begin with, but quickly gets bought back up. And it's that buying back up, this long tail of the candle, that I want to see before I take my opening range break trade. Because if I don't see this, the trade could do it. It could go any way it wants. But once I see that it's pushed below 700, it's failed, and it's coming back up, now I'm going to take my trade. So this 2-minute candle closes here. It then opens here, has a bit of a push down, and then gets brought right back up. And then as it's coming into here, I'm going to take, this was at $702, so I'm going to take the 705 calls for this week expiry. And then I took my profits up here. Could have held for a bigger winner, but you don't know it's going to do that. So I'm a big advocate of just taking the quick move. I don't want to be sat here all day, sitting on my hands, waiting for this thing to go to the moon, because it can quite easily have a massive pullback and you end up with a loss. I'm more than happy to take this break, has a nice push, tape speeds up, level 2 speeds up, and then I'm just going to take my profits around here. We then have bull and bear flags and pennants, which are highly respected, patterns, trade patterns within a multitude of markets, and they give you a much higher probability, percentage chance of that trade going in your favor. Here's a great example of a nice bear flag on Tesla from the 29th of June 2022. As you can see, this is our opening candle, our 2-minute candle. Straight off, we have some strong selling pressure. Straight off, there's no green candles, it doesn't really push up, we just have straight selling pressure straight from the open. And then we have this nice little pullback here, this one green candle, and then we have another sell off here. And this green candle and this little pullback is what we want to capitalize on, and giving us a high probability, higher percentage chance of this trade going in our favor. So if I take my drawing tool, this is what I would draw as the market's trading. And the reason I do that, if I fill in down here, so we have strong selling pressure down here, we then get this pullback across here and there's your bear flag. And this is the key line that we want to focus on. So you're taking it from the wicks, joining the wicks up, and then just continuing it. And as we get this pullback, the candle closes green, which I like. It shows that the market's had a bit of time. It's a decent enough pullback, but not too much that it could reverse. And then we start to see this selling pressure again. And as soon as it breaks this flag line, that's where I'm looking to buy some put options. So this was trading about $677. So I'm taking the 675 puts because they're the first option strike outside the money for that week expiry. And then as we get this push lower, that's where I'm going to take my profits in and around here. I don't want to be holding for the monster winner. I just take nice quick profits here. And then finally, what I want to look for is a higher day or lower day break, which again is a bit like a 2-minute opening range break, but set out over a longer period of time. Here's an example of a higher day break on Tesla on the 8th of July 2022, which a higher day or a lower day break is essentially the same as a 2-minute opening range break, but you've given the market a bit of time to develop and set out its stall. So this is our opening candle here, and as you can see, it has a push up, pull back, and then another push up where it finally decides which direction it wants to go for today. So what we're doing here is we will mark the high and the low of the day off the open. After 15-20 minutes, that's when we're going to set our higher day. So if I draw on here, this is the high, and the low is actually set off the opening candle, which you can't quite see because of the volume bar, but that's where the low was set. So this was at 9:46, so first 15 minutes, let it do its thing, and then we set our highs. So it has a pullback here, we've set our high, and then we're looking to see if it's going to come all the way back and break the lower day, in which case we would take put options, or in this instance it has a bit of consolidation, starts to push higher, and then breaks the higher day for a nice push up. So after this consolidation, once it starts to push up, I've got my higher day marked, so I'm looking for this break to take my trade. And this level was at $741.5. So I'd be looking at the first call option outside of the money, which would be the 745 calls. So I'm actually going to execute this and take my trade just before the break. It does carry more risk doing that because it's not actually broken the higher day, but with more risk comes more reward. So I'm going to get a better feel taking this trade just before the break. But I'm fairly confident in this because it's had a nice push off. It's going higher and higher. So I'm going to take it just before the 745 calls, and then again, like always, it breaks the higher day, has a nice push up, and I'm taking profits around here. I'm not looking for the big winner. I'm just going to take my quick profits, and that's my trade done.
So here we have an example of the 2-minute opening range break that I showed earlier in the presentation, and as you can see, it's opened up right around that 700 level. So immediately before market opens, I'm thinking that this has potential to be a 2-minute opening range break. And something that may be slightly controversial and that many people don't think is correct is that I will do no pre-market analysis. I won't look at any previous day's charts or the daily charts, 15-minute charts to see what the market's doing. I don't look at the pre-market. And the reason I do that is I want to come in with absolute zero bias. I want to watch what's in front of me and just take action from what I see. I don't want to have a niggling feeling in the back of my head that this has been in an uptrend for the last week, so it's going to continue to go up. I just want to see what's in front of me and trade that accordingly. So with that being said, you can see here that off the open, Tesla pushes down below the 700 mark. It really pushes down. It gets to about 697, pushes below 700, gets brought back up a bit, back down below. So I'm just letting this first 2-minute candle sort itself out. It's not picked a direction, so I'm not thinking which direction it's going to go yet. I'm just watching what's happening and then see which way the trade's going to go. Pushes down a bit further to 696, but still not really done anything yet. So this first 2-minute candle is coming to close soon. It's actually going to get bought up again really quickly, back above the 700, getting bought back up, and I'm just watching it. I've not made a decision what way it's going to go yet, but the second 2-minute candle is going to open just there. So at the minute I've got the 705 calls selected, but as you'll see, I flip between the 705 calls and the 695 puts because I'm just letting the candles dictate which way it's going to trade. And you'll see here that it gets above 700, drops back below, gets above, drops below. So I'm just waiting for it to either break the low set at 696, and I would take some 695 calls, or break the high set at 702 and take some 705 calls. So you can see here that I'm putting the 695 puts and the 705 calls in my watch list because it just means I've got to one-click those. And speed is of the essence, so it's just adding to that ease that I can click it, it puts it in my order window, and then I would just click buy or sell, and that's it. So as you can see here, it's dropped below 700, so I've got the 695 puts up, it then gets brought back up. So I'm going over to the 705 calls, I've just put them in the order window. So I'm still flitting in between whether I'm going to go calls or puts, and then you can see here it gets bought up 701, getting up to 702, and once it gets past 702 I buy 8 contracts of the 705 calls at $12, and it has a really nice push up there. And then I just want to hold on. I'm nicely in profit now, and I just want to hold on to see if it has that second push just to eke a bit more profit out. But at this point I know I've got a nice winner. I don't want to hold too long. I don't want to hold it into a loser, but I'm just letting it push a little bit further, and then once it takes that second push I get out, and I actually only end up holding this trade for 38 seconds and I make over $1,200. I mean, where else can you work for 38 seconds and make $1,200? There's that second push. As soon as it pushes up there, I sell all of the contracts for $13.56. And as you'll see in a second, it's $1,200 profit. That's me done for the day. One and done. I don't need to trade all three strategies. That's one and done, and we walk away. And that's it. That is my trading strategy, the 3 tools I use to make money out of the stock market, specifically Tesla. I only trade Tesla every day because I know how that works. I don't need to go searching for anything else. I hope you guys enjoyed the video. Thank you so much for watching. Please like, subscribe and share with your friends, and there will be more to come from me.